I'm ready to go. Yeah, sure.
All right, let's get into it. So
Yeah,
welcome guys to another collab video. Obviously me and Wolves of Crypto haven't done one for, it's been about 3 weeks, hasn't it?
yeah, 3 or 4 weeks. Yeah. So last time we did one, the market would have been, I think, probably low 50K, somewhere in that region. But yeah,
Yeah, I think if I recall, we are just above or just holding support on that 50 SMA on the weekly, and since then we've kind of dropped down a fair bit, haven't we?
yeah, we've dropped significantly, and I think we were talking a lot in that video that we did, 45-minute video, by the way. Go check it out if you haven't already. It's still quite relevant to this day because some of the ideas have played out a bit more. But obviously we'll cover a bit more in this video, but we were talking about the 50-week SMA and how important that was, and since then we've obviously dropped below that, and I think we've closed below it twice now, if I remember correctly. Or we might be coming into our second close, and so our predictions from that video have been validated to a certain extent.
Yeah, I agree. And basically what today's video is going to be over is we're going to be covering a bit of Bitcoin. We're going to kind of recap on what's happened in the last few weeks and kind of give our new projections on both the bullish and the bearish case scenarios. We do have a few charts that can suggest potential bottoms are in, and we may see a possible bounce. And we do have a chart to show you what would happen in the absolute worst case scenario if we do come down to our 200-day moving average on the weekly chart, as we have done in previous bear cycles, where that price target would be.
Yeah.
And I think you were going to talk about Ethereum as well today.
Yeah, I'll talk a little bit. Obviously, you'll cover Bitcoin a lot. I'll obviously interject there with some stuff that I've got to talk about, including the possibility of a repeat from May to July that I've been talking about on my YouTube channel. Yeah, but I'll talk about Ethereum quite a bit and the macro structure of Ethereum. And then obviously, I think, as you just said, we might get into altcoins at the end, a few altcoins to talk about. I've got Cardano here that I'm looking at, and I might pick up a few other ones as the video goes along.
Yeah, we'll select a couple random altcoins to go over. There's a few that's been requested by my community that I might bring up, but we'll be looking at those basically from scratch and just giving our live opinions on what we believe is going to happen. All right, so what we're going to start with today is a chart on Bitcoin. It's a 2-day chart that we did talk about a little bit in a few previous videos. But the main thing we did want to cover today, again, just to kind of remind you guys what's happening, is we did lose that 200-day moving average on the 2-day chart. Now, historically, the 200-day moving average has acted as a very strong support for Bitcoin throughout the entirety of the bull market, and has acted as a bottom in the bear markets on the weekly charts, which we'll show you in just a minute. As we can see, we did come down and retest that 200-day moving average on the 20th of July with that bullish engulfing candle, which ended up sending us back up into a bull run and a continuation upwards for the market. Since then, we did drop that 200-day moving average in the last couple of days, and we have seen a pretty hefty drop since that point. If we go back and look in time, historically, every time we've dropped that 200-day moving average, we've seen a pretty significant crash. Obviously, we had the drop on the 9th of March in 2020, which is a COVID crash, and myself and Wolf have similar but different opinions on why we believe this is a relevant piece of information and also a black swan piece of information. We kind of need to take it with a grain of salt. I personally believe that even though we had a bit of bearish news and obviously the global economy crashed, when we drop past certain long-term critical support lines, no matter what causes that drop, we will see a continuation downwards if that support is broken. Do you agree on that, Wolf, or do you have a different opinion?
For sure, yeah. I think that's very important to emphasize. And if we were to look at the weekly chart right now, the 200 on the weekly chart, what we would see is that even though we had a COVID drop, even though something very unexpected and very sudden happened that caused rapid depreciation in price, right, that no one could have really predicted. Some would say, oh, well, that was caused by global fears, But the point is, right, technical analysis will still prevail because at the end of the day, we still held that 200 MA, right? So
100%.
Technical analysis is still relevant even in times where the market is very unstable due to global events, and that's very important to note.
Absolutely. 100% agree with what you just said. I think that's definitely an important note. Just going into the future too, with a lot of instability in the global financial markets at the moment too, is technical analysis will still be relevant and can still be used, if used correctly, to predict price action. But going back to the chart, we did see another crash in that 2018 on 12th of July, which did send us below that 200-day moving average, and we saw a pretty significant drop from that point of around 56%. That COVID crash, of course, we saw a pretty significant drop of 51%, and our first one was in 2014 when we dropped that 200-day moving average. We saw a longer extended crash down to about $152, which was 68%. Imagine buying Bitcoin at $162. That would be awesome.
Yeah.
If only you could rewind time, hey. Anyway,
yeah, sure.
moving on with it. We're using this information to kind of share with you our predictions of what happens or where we would expect the price to head down to if we did follow the same trend in the past, which is losing a 200-day moving average on the 2-day chart, then going down to retest it on the weekly. So that's the big question for today right now, and we're kind of looking at that in this initial chart before we move on to anything else, is where do we believe the 200-day moving average will be if we see a significant drop in Bitcoin like we have seen every other time we've lost that 200-day moving average on the 2-day chart. So I've done this analysis for a few times on my channel and a few videos on my channel already, so I'm not going to go into the nitty and gritty of it, but the average is about 175 days. So we expect about 175 days from the current drop, which is about a few days ago. We'll take it from here, this is a weekly chart, until we reach that 200-day moving average on the weekly chart. So how can we basically assess where that will end up, where the 200-day moving average will end up? Well, we look at the previous 175 days, and we assume that the trajectory of the 200-day moving average is going to stay consistent for the next 175 days. Obviously, this is a rough assumption. It's all we can do with the data we have available. As time progresses, the indicators will smooth out a bit more. We'll have a more accurate understanding of the trajectory. But as an initial estimate for such an early time in the bear market, this is kind of a rough understanding of where a potential bottom would be, or what the lowest the price could possibly go on the worst case scenario if we do go into a full-blown bear market.
Yep, yeah, of course.
So what we do, 175 days from that period, we're going to line this one up here. 177 is about the same. We take a height and length ratio move from that point. We're going to apply that over here, drag this one up, keep it consistent, and then all we're going to do is we're going to take that 200-day moving average, take it from horizontal point to horizontal point, and that is our estimated distance for that 200-day moving average. And what we'll do, we'll just color it in so it's the same color, delete all of this, and what we'd expect is the price to dwindle downward towards that level, bottoming out somewhere around that period, early July, around $24,000 to $30,000. That would be the absolute worst case scenario if we went into a full-blown bear market, considering every other time we lost a 200-day moving average on the 2-day chart. We have seen this in fact play out.
I think that it's important to note as well, and I was talking about this with you before the video, that this kind of analysis here, and this, not the entire thing, but what you just did with those data ranges and price ranges, it's based off 2 data points. And it's very important to note, guys, that 2 data points is not technically enough to form a strong kind of correlation in trends. And so we need to take it with a grain of salt. It can't be accurate. It's going to be impossible to make a very accurate prediction, right? It's simply just not possible. We don't have enough information available. For example, right, I previously this year would have said that, I was a believer in the 4-year cycle theory, right? And I said that, 2013 and 2017 look similar to right now. And I essentially used data from those 2 data points to extrapolate the data and make a prediction that was a lot higher than what we actually reached this year. And I kind of learned my lesson there. You can't really use 2 data points to accurately predict something, but it can be a guideline.
That's 100% correct.
Yeah,
and that's kind of what we were going for with this one. Is not to be an accurate prediction. It's to give you an understanding of a possible scenario at the worst case. So this is absolute worst case scenario, what we would expect to see if Bitcoin followed the historical pattern is followed in the past. But you're right, using 2 data points will never give you a accurate prediction, but it's something to kind of guide you in which direction the market is heading, more or less.
Yep. All right, I guess you can. Do you want to go on to your next Bitcoin chart, or do you want to bring
we'll
up
get the I think we'll get all the Bitcoin charts done. The next one is more of a shorter term analysis on the macro. Obviously, there's a lot going on here. Just our charts are a little bit different. So just to show you guys, these red zones are our resistance zones, yellow zones are our support zones. Obviously, we've got a volume profile, which Wolves will cover in a little bit, so I'm going to get rid of that. This thick red line is my trigger line, which means we need to break above this line to have any possibility of an uptrend reforming. $53,000 is our major resistance. If we break above $53,000, we'll have a continuation of the bull market upswinging to the top of this resistance. But taking a look at the chart from a macro point of view, we are in a descending channel. We saw a similar price action play out over here, descending channel followed to an upswing, and we're seeing a similar thing here. The only difference between these two is this time on this scenario here, we found support and we maintained above our long-term bull market trend line, which is this horizontal black line moving upwards. The difference this time is we dropped below, we found resistance, rejected, and have continued downwards. With that being said, it doesn't take out of the fact that a descending channel is a bullish channel, and we do expect some sort of a move to the upside at some point. Now, Wolves will cover his opinion on this. We share a very similar opinion. I think his opinion is we're going to see a head and shoulder pattern play out, inverted head and shoulder pattern play out. My opinion is more or less the same. I expect to see one of two scenarios play out. Number one is we're going to push sideways between these two zones here. Finally, we're going to break out, push up, retest this zone as support, and then we're going to come up anywhere between below 48,500 and into this resistance range before moving back on down. The second scenario is we dump from here into this range and then play out that exact scenario which we see. But both scenarios, in my opinion, we are primed for a bounce at some point. Obviously, we cannot just continue downwards forever. The price will have to stabilize, find support, and bounce. And this zone here, this yellow box here, which Wolves will go over, is quite a strong support zone, would you not say?
Oh, for sure. I'll bring up my chart now. I'll share my screen here. I'll talk about the volume profile. I'll talk about that zone.
That sounds great.
Head and shoulders pattern. Yeah, sure. Let me just share this screen. All right, so let me go first and foremost. I've got a few lines here that you guys can just ignore. In fact, I'll delete them because we'll get a clear analysis here. And we'll just draw in that major support box that just roughly is going to be in that region from, let's say, I don't know, 40K to 42K or 43K, something like that, right? And what we can notice is that in that support region, that major support block, that green box there, we have a pretty telling kind of indicator or indication coming through from the volume profile. For those of you who don't know what the volume profile is, the volume profile essentially measures, like on this screen right now, on this visible range, where the historical trading volume has happened, right? These massive mountains or peaks mean that, you know, in this area here, for example, 47K, that is where the most historical trading volume has come through on Bitcoin in this visible range. And so 47K, if you're below it, right, if you're below that peak, it's acting as resistance. And if you're above a peak, it's acting as support, right? So this peak here would act as support, and this would act as resistance. Right now, we are in a crevice. And what that would mean is basically the market is in a place in which it needs to make a decision. And we usually consolidate for a bit in crevices like we did in September, right? We were in a crevice here, we consolidated on support, and then we made a decision and we attacked the upside, right? There's no kind of sure way to say where we will attack. I think personally, due to the length of this drop, partially, we've dropped down for literally 2 months straight now. We're going to see some relief, and I think that this crevice is the perfect opportunity for that to happen. And so for that reason, I think that while we are above 40K, a bounce upwards is very likely. The obvious target for that bounce, based off the volume profile, and obviously MegaWhale just talked about a few other targets there, but based off the volume profile, the obvious target for that bounce is at least 47.2K. And probably you could even get up to maybe 49K. And what's interesting about that zone as well is that the bull market support band is going to be in that region by the time we get there, right? Because it's going to trend downwards a little bit. And so this will probably be, somewhere around here, around 50K, 49K. And so we could potentially bounce all the way up to that region, reject off there, and then come down. And I think that'd be a pretty clear head and shoulders pattern. One thing that people would say about this that could be questionable as to whether it's actually a head and shoulders pattern or not is that in order for it to be an actual head and shoulders pattern, we probably need to be taking out this kind of little peak here. We probably need to be going a little bit higher. And for that reason, and this goes in with what MegaWhale said as well, I think that in order to be bullish on the market again, right, in order to look at this chart and think, wow, that's pretty bullish, 53K is the ultimate target. We'd need to be taking out this left shoulder here and going higher than that, jumping above that point.
I 100% agree with you. Did you want to zoom in a little bit to that bottom volume profile underneath your support range? And just identify, like, that is a very strong area of support. We can see, look at all that volume between that 40,000 to 30,000 range.
Yeah.
And I think,
we've consolidated in that region for months and months and months historically. So
100%. I think that's something that I want you guys just to keep in mind as we move over to our next chart, because that is quite a strong range and it's going to be very, very difficult for the price to drop below it. But if we do drop below that range, it's going to be pretty catastrophic for Bitcoin. But I think saying that that's going to happen now is jumping the gun a little bit. We do have a lot of support between that range. And as you said, a push up to that POC range of 47,300 is probably going to be the more probable short-term direction rather than just an immediate crash down to 30K.
For sure. And I'll talk about as well the fact that this bounce doesn't have to happen right now, right? There's no kind of indicator that's telling us, well, nothing that I've seen at least, it's going to happen, in 3 days this week. I think that it could take a bit of an extended period of time, maybe another few weeks, right? Usually when we dip down into these major support zones in a strong downward trend, we see that consolidation like we saw in September. I mean, in September it was only 10 days, but that's a decent amount of time, right? So I feel like a lot of people get in the kind of feeling when we see a sharp downward trend that, you need to act right now, we need to buy right now, otherwise I'm going to miss it and it's going to pump up, I'm going to miss it. That's not what's going to happen, right? It's probably going to be a lengthy consolidation. With things like the RSI, okay, what's worth noting about the RSI is that it's very misleading, because even in this May to July period, we had bullish RSI playing out in May all the way through to July, and it took almost 2 or 3 months for us to actually see a price appreciation that was significant and took back resistance.
Especially on the shorter timeframes like the daily chart.
For sure. You don't really need to act now. Act when resistance is broken. Taking a fractal from this May to July period directly, we can see that this move is showing, pretty uncanny similarities. I mean, we've had these 3 kind of peaks here. We had a little bigger peak, just like we saw in May, and now we've dropped down a little bit further. And so taking that fractal, it's pretty telling that we're in a similar structure. But what I would say to this, and a lot of perma bulls on Twitter, right, basically scammers on Twitter, the way I see them, is that they're using this as evidence that we're going to go to new all-time highs. They're using this as evidence that, hey, we're going to consolidate and then we're going to bounce up and go to bloody 100K, right? That's not the case, right? Just because we're seeing consolidation similar to what we saw in May to July, it doesn't mean it needs to send us to new all-time highs. It could just be the catalyst for that head and shoulders bounce that I've been talking about. I
agree. And if you take a look at, our moving averages and our critical zones of support, we're in a very different spot than we were in July. In July, we weren't underneath the 200-day moving average. We weren't under 50 SMA. There's a lot of things. We weren't underneath the long-term bullish bull support line, horizontal support line. There's a lot of reasons why saying that we're going to bounce from that point and going straight to 100K is complete and utter nonsense. But I would like to go back to a point about having a predicted date of when we do think this bounce will occur. And I believe we can have a pretty rough understanding of where we believe it's going to happen. I think anywhere tracing downwards on this horizontal resistance line, which you see on this descending channel, will be the point at which the break and the bounce occurs. So we saw a similar thing happen here. Every time we break, we do usually push upwards. I do believe a retest of this support will be in play, but I think anywhere between a safe estimate of about the 15th to the 22nd of January, so mid-January, we are expecting a break and a bounce to initiate. That's my personal opinion.
Yeah, I mean, I've seen your analysis in that, and I would say that I agree with that. That gives us a little bit of time for consolidation. I think it's kind of a sweet spot there. I think mid-January, I'd agree with that as well. Yeah.
Cool. So there's one more chart I want to go over, and this is a newer chart. I haven't talked about much, and actually I have never talked about on YouTube the hash ribbons, because I'm not a huge fan of the hash ribbons, just because they don't tell us a lot, but they do tell us some bits of important information of where we can expect daily candle closes to be, according to previous daily candle closes, obviously looking back in history. And what we can notice is every single time we do have a buy signal flash on the hash ribbons, we never see, or very, very small chance, I think it's a 16% chance that we see a daily candle close below that previous daily candle low. Meaning when this hash ribbon flashed a buy signal, which is here, this was a daily candle low, which is 37,400. I think out of the 9 instances which we've had a buy signal flash, only 2 times has the daily candle closed below that daily low. And one of those times was the COVID crash, which is obviously a black swan event. And the other time was in 2014. And obviously the market was very new back then, so we didn't have a lot of data. But if we had to go off this analysis and take the hash ribbons, seriously and assume it's going to be correct, we would have to assume that we're not going to see a daily candle close below $37,000 again. And if we take a look and remember back to Wolves of Crypto's chart with the volume profile, this whole range below 40,000 to 30,000 was a super strong support range. So it's very unlikely that we're just going to crash right below through it. And obviously the hash ribbons is something to keep in mind for a bullish continuation. Or if you want to look at the bull case scenario and you've had enough of hearing about bear case scenarios, this is a piece of possible data that can support that we are close to the bottom and we will be reversing pretty soon.
Yep. And I'd just like to say as well that the problem with kind of looking at bull case scenarios too much and kind of getting that information across is because there are bullish charts, right? And I mean, he's just showed you one there. That's a bullish chart for sure, and that's a bullish indicator. But I think the quantity of bearish indicators just is extreme in regard to the quantity of bullish indicators. It's completely. I mean, the market is completely bearish right now. I mean, for people who I'd go as far to say for people who don't admit that the market looks bearish right now, I'm not caring about the short-term price action, right? Next couple of months doesn't matter. We could bounce up, but on a longer-term scale. We've lost the structure. We've lost dynamic support. Yeah, we have a few bullish charts left, but there's no point relying on 2 or 3 bullish charts when you're just ignoring 10 or 12 bearish ones.
You're 100% correct, and this is just but one piece of data that suggests a possible bull case. And like you said, it is overwhelming evidence that we are in a bear market, and usually evidence prevails and data prevails, and it's all a probability game. It's all a probability game trading. And like Wolves just said, we are in fact definitely in a bear market. And if you don't believe it, you're just looking at the market from a biased perspective and you're not looking at the objective facts. Me and Wolves have been telling you guys ever since we lost and we've been bouncing on that 50 SMA on that 2-day chart over here that we are bearish. We're not expecting a bear market at that point, but we were definitely bearish. But now since we've lost our 200-day moving average, we are confirmed in a bear market. It is confirmed we're in a bear market. We are 100% bearish until we get a significant reversal or until we get critical data points and resistance areas broken and flip to support, we will remain bearish.
And it's worth noting as well, just because we think we're in a bear market, it doesn't mean we think we're in a 3-year bear market, right?
That's correct.
I mean, you've literally just pointed out 10 minutes ago that you think that July might be the potential bottom, right? Based off that data you looked at. And so there's a difference between, I think a lot of people have a perception of what a bear market is. I don't know where they get it from, but it doesn't need to be 3 years long. It could just be a few months long. I would even argue to a certain extent that the May to July period was a bear market. It just depends on your definition of a bear market.
Well, the standard definition of a bear market in a financial market is any time the price has dropped 20% from its all-time high. That is generally the standard definition of a bear market. If we're taking a look at the definition of a bear market based on technical indicators, losing critical long-term moving averages, such as a 200-day moving average and a 50 SMA, is the sign of a bear market. So you're 100% right. This is technically a bear market if we're talking technical terms. We are now down, I think, 40-ish, 41% we dropped from the all-time high. There's absolutely no doubt in my mind we're in a bear market, and you're 100% correct in saying anyone who's not agreeing with that is playing the wrong side of the game. They're against the trend, and they've got their money on the lower probability, and they're probably going to lose. And they probably have already lost a significant amount of money during this drop.
Yep.
Anyway, that's enough about Bitcoin, man. I reckon let's get into Ethereum. Do you want to pop your?
For sure, yeah. I'll grab a screenshot if you just turn yours off. Yeah, here we go. We'll jump to Ethereum here. Okay, ultimately Ethereum. There was a period in time here that I was talking about Ethereum a couple of weeks ago where it actually didn't look too bad. We were holding this level here, even though Bitcoin was in the 40K region. We were holding that channel. I'll delete some of this so you can see more clearly. And we didn't look too bad, but that's kind of changed for the worse in the last few days. And what we're seeing from Ethereum right now is massive drops below this long-term kind of uptrending channel that's been forming since August. But I've actually used that as one of the major support and resistance zones on Ethereum on my charting. I don't look at Ethereum too much, but what I can say about Ethereum is that we held this since August. We've dropped below it, held a support for a bit, fell into it. It kept ranging in that region, and now we've dropped below it. we've retested the top and we've head back down. Usually when you see a rejection off of something you just lost, for example, a channel in this case, you're going to see a very quick bearish depreciation in value. And we just saw that, right? The last 3 days, we've seen a drop from 3,800 all the way down to around near 3,000. And we are edging towards, on Ethereum, a potential bounce zone. And this goes in, kind of ties into what I think about Bitcoin, about how I think Bitcoin's in a bounce zone currently as well. And I think that Ethereum is going to reach, according to the volume profile again, according to the volume profile, is going to reach that 3,000 support region between 3,000 and 2,850 that I have listed there as support. Once it reaches that zone, I think we'll see a dead cat bounce, very similar to what we saw on Bitcoin. What is worth noting about Ethereum, and I'll get back into the weekly chart on Ethereum in a second, what is worth noting about Ethereum is the relation to Bitcoin dominance on Ethereum. Because obviously when Bitcoin's outperforming when Ethereum's outperforming Bitcoin, Bitcoin dominance typically goes down, as that means altcoins are outperforming Bitcoin. Ethereum is the leader of the altcoins at the end of the day. And what we can see here on dead cat bounces typically is that Ethereum and altcoins tend to kind of outperform a bit as people try to get the last little bit of gains before a potential bear market. And so if we do see this dead cat bounce play out, there is a probability that we need to keep in mind that Ethereum could outperform Bitcoin, and we could drop below this long, lengthy tested support box here on Bitcoin dominance. And if we do drop below that, that would be a further indication that we're going to be entering a bear market on Bitcoin, right? What I will talk about as well is the weekly chart on Ethereum and the structure we have on the weekly chart. I talked about this a lot earlier in the year, and the kind of similar pattern that we formed in 2017. We had this peak here in 2017 in June on this resistance line. We dropped down, we had a bottom out in July, we came up, had a top out in September, and then we broke through in November, right? Same pattern to the same dates. We had this top out, it was actually in May this time, not June, but we bottomed out in July, topped out in September, and then we broke out in November. So very similar pattern, and even by looking at it, you can see it's kind of like a slanted W formation to a breakout. The breakout was overall ruined. And for some people, this would mean that the kind of long-term structure of Ethereum is fractured, because that is Ethereum's only had 2 real cycles. And when you're looking at evidence from previous cycles, which is very important to determine the long-term health of an asset, right? You need to look at these trends playing out. And to an extent, I suppose it played out, right? We broke above that resistance. Last time we broke above it in 2017, we saw a 287% appreciation in around 49 days. This time we technically broke above on the same date, and the structure did remain, but we only appreciated 22%. And I think this kind of ties into what this cycle has been like for Bitcoin and Ethereum. Underwhelming, very underwhelming, and like we talked about in the last Wolf and Whale video, that kind of is a direct result of institutions taking control in the market. It's ruined everything a little bit, but again, we have to rely on the support and resistance zones. We have to rely on the technical analysis, and just because this cycle has been diminished, even for Ethereum and Bitcoin, and Ethereum has considerably outperformed Bitcoin in terms of gains, which is why I'm bringing this up, right? Even though this cycle has been diminished, there still are gains to be made. And even though, future cycles may have even less of a chance of reaching high returns, there still will be gains to be made due to the technical analysis, right? And the structure still kind of remains. There still are similarities here that we need to be looking at, even though we're not looking at, 100x's again in the future. The market's probably going to be significantly dimmed down, in my opinion, in future cycles, unless you're looking at micro cap altcoins.
Yeah, I agree. And I think going back to the point of the bull market and was it underwhelming, I think that's all about perspective. If you leave that chart up for a second, the bull market technically, the bear market technically ended when we touched that 200-day moving average on the weekly, which is in that COVID crash. So if we're looking at the perspective of the bull market, it has been a significant rise from around $100 Ethereum up into a 4,000. It's been about 40x. Sure. But 100%. If we're taking a look at specifically that blow off top that we've seen on other bull cycles, it's been very, very underwhelming. And if you guys remember back to our first collab video, I showed you a log scale of Bitcoin on the long term with our long-term resistance line that was drawn right through the horizontal center, which showed you every single time we break above it, we enter a parabolic explosive blow off top. And that's very consistent with the numbers we've got on this chart, which is 287% blow off top and 22% blow off top. Because if I remember correctly, the last 2 blow off tops we had was around 540%, where the one from this year was only around 48% on Bitcoin. So about 10 times less. And we're seeing a similar thing here on Ethereum chart. It's about 10 times less on that blow off top that we've seen. And I think, like you would agree, the bull market hasn't been underwhelming. It's just that a last step of that bull market, that blow off top where everyone was expecting huge parabolic rallies, that was underwhelming.
Yeah, for sure, 100%. And I'll just like to reiterate again, because I don't think I made it very clear. But overall, in looking at this Ethereum analysis, we have to have the same conclusion as Bitcoin. That is, we've dropped below. If I had to look at the 2-day chart, 3-day chart, weekly chart, I could look at all of that right now, but it's just going to be a waste of time, right? The point is, we've dropped below the same critical support zones that we've dropped below on Bitcoin, and so we are in bear market territory as well as Ethereum. But I would be looking at this major support box again between 3,000 and 2,800 for the bounce zone. If you were someone who liked, swing trading or scalp trading, I wouldn't really recommend it to the average investor, right? But you would be looking for longs in that region potentially, because that is just major support, and that's where we're going to be bouncing, but specifically if we hold this green box on Bitcoin as well. So Ethereum and Bitcoin are very correlated. And Ethereum, I would argue, would have a better return potential in a situation of a dead cat bounce than Bitcoin, because Ethereum also has the potential to trigger some sort of miniature kind of altcoin season, although I think that's very unlikely at this point. But you have to consider it, because we have been on this support box on Bitcoin dominance for literally months now, and we're just, we're not breaking to the upside by the looks of it. So it will be interesting to see what happens here with that. Keep an eye on the Bitcoin dominance chart. I think 39% is the major support that we need to be holding. If we drop below that, altcoins, it's not going to be, okay, get the perception of a 10x altcoin season out of your mind. The total cryptocurrency market cap is very low now, and so it won't be massive, but it will be substantial, okay, if we do drop below that.
And I think one of the points you reiterated in that last phrase we were talking about, were saying that right now the market is by far the worst time to be trading if you're an inexperienced investor. I've stressed that to my community. Right now, it is very unstable, very volatile, and a lot of short-term analyses, although they look good, they randomly and sporadically turn very horrible very fast. So we're seeing huge liquidity wicks in altcoins and Bitcoins on the 1 minute chart even in the last few days. And right now, if you're not experienced and you haven't perfectly mastered your risk management for trading, you should definitely not be trading right now. Now is a waiting game. Now is a game of patience. If you remember back to actually, do you mind if I bring my chart up real quickly?
For sure, yeah, no worries.
If you remember back to this chart we talked about 10 minutes ago, which was this one here, during this chop zone here, it is a no trade zone. No one should be trading this unless you've got a lot of experience in the market. And you have very tight risk management and very tight stop losses. Once we break this and we are in a new uptrend, it doesn't matter how long the uptrend lasts, but if the market is an uptrend, trading becomes a lot easier. This is when amateur investors can jump into the market and trade. So if you're out of the market right now, you're sitting there waiting and you're kind of getting sick of waiting around, just know you are doing the correct thing. You are being safe and cautious, and regardless of what happens, you shouldn't FOMO in until a new uptrend is developed.
Yeah, for sure. And if you can't, and not to insult anyone who's in that position, but if you can't wait 2 weeks for a new uptrend to be formed, you probably shouldn't be in this market in the first place, because one of the most fundamental keys to success in trading and investing in general is patience. And you need to be able to have patience. And one of the ways you can kind of encourage yourself to be patient is by taking this time. What I've been encouraging in my community is taking this time to learn about the fundamentals, right? Because although technical analysis is great, and I favor technical analysis over fundamental analysis, it is very important to know about the long-term, the longevity of an asset you're investing in, right? Because even if you're trading, you don't want to kind of invest in bad assets, right? Because you're kind of, it's a bit hypocritical in a sense. You can't really invest in something you think is going to fail in the long term. I mean, I guess you can if you're a scalp trader, but even for swing trading, because what if something goes wrong on a fundamental level? Bitcoin, for example, Bitcoin is basically the leader of the market. For the foreseeable future, it probably will be the leader of the market. And so even if you're a trader, even if you don't care about fundamentals, you should have at least a base level of understanding of what Bitcoin is, how it works, etc. And if you don't have that, I'd recommend taking this time in a downtrend when you're not trading to learn about that and set yourself up for the future.
100%. And I would just like to touch on the fact that This market is incredibly volatile, and I believe the reason why people still feel so rushed to make decisions day in, day out with their investment and always be in the market, always looking for the next opportunity, is because the market is very volatile. And if you look on the publicity, the social media, Twitter, there's always someone telling you it's going to moon, and there's so much FOMO around this market. It makes someone with a less experience feel pressured into making uneducated and rapid decisions. And those decisions are what causes you to lose most of the time, because essentially it is just gambling at that point.
Yep. And if you zoom out to the whole entirety of 2021, sorry, it's so important to note that this had been a very stressful year in the market for a lot of people, especially new investors, where they're constantly stressed, staying up all night, 3 a.m. every night, looking at the charts 24/7. But nothing happened. Nothing happened in the entire year. Yeah, exactly. But it's very important to note that nothing happened, and so that stress that you're feeling about you need to do this right now is just so irrelevant when you look out on a larger term scale. And that's why I'd even go as far to say, right, that brand new investors probably shouldn't look at anything lower time frame than the daily chart if you're brand new, right? Obviously, you need to, if you're going to start trading, you need to start doing that. But if you're brand new to the market, stay away from that emotion. Look at the daily chart. Look at the longer term trends. Don't zoom in too much, right? And that's very basic, but that's my recommendation.
And believe it or not, guys, the market is not going anywhere. If you don't trade today, guess what? The market's still here tomorrow. There's still opportunities tomorrow. And that's the big thing you need to realize. And as soon as you realize that, you'll be able to manage your patience a lot easier. You don't need to jump in every single move. You don't need to catch every move at the bottom. You can join halfway up and still make amazing profits. It's not about how much profit you make. It's about how much profit you're able to maintain when you're wrong. And that's what defines you as a good trader. It's risk management. Anyway, I think we've talked enough.
Yeah, sure.
Do you think I think we've talked enough about Bitcoin?
Yeah, for sure. Let's get on to altcoins and stuff.
Sure.
Yeah. I guess I'll start first.
Yeah, did you want to start with Cardano?
Sure thing, yeah. I'll do a screen share of that. I was talking about this morning in my YouTube channel here. Let me just bring this up. Where's my chart? Here it is. So Cardano, and the reason why I was talking about this morning on YouTube, right, is because I was meant to have a fresh chart here, but I'll just leave it like this. We have this kind of long-term or longish term, right, uptrending line that formed in April 2021 that's kind of wicked off on 1, right, 2, 3, 4, 5, 6 kind of points here that we've held it for support, this red line. We also have this dotted line descending channel formation, descending wedge formation, sorry, that I thought was relevant, right? We maintained this for a while, but ultimately dropped below it, and we came up and we've kind of rejected off it a little bit, and we've headed back down. And so Cardano is in a decision point in which it's kind of wedged between massive support and massive resistance. But what I would say about Cardano, and the reason why I think that trading this right now wouldn't be too unfavorable, is because if you were trading this, all you would need to do is set a stop loss very close below, because this support line is held to the T on multiple occasions. And so if we do drop below this support line, we're probably going to drop a lot further. I mean, there's an amazing lack of support below this support line on Cardano. I mean, look how quickly we went up here. There's no support built in that region. So if we drop below this red line here, it would be logical to assume that we're going to see a slow depreciation down probably to bear market prices, right? Maybe a little bit higher, maybe in that region between 30 cents there. But essentially this is kind of the last stand for Cardano. And I think there would be a lot of interest in this point. And we're seeing that come through. I've talked about it a lot today for some reason, but we're seeing that come through from the volume profile where this is the POC, right? The POC is at $1.21. We're currently at $1.22 almost. So we're in the major region of trading, right, for Cardano right now, which means there's a lot of interest right now at these prices, which is interesting because we're on that major support line. It's also interesting because we're forming a double bottom formation right now if we are able to maintain the support line. And so what I would say to those of you who are looking to get into a trade right now about Cardano is that although, if we do drop below it, it's going to go down quickly, you can always set your stop loss very, very tightly below. I mean, you could even set it probably 5% below. So you're taking a very low amount of risk. And then obviously Bitcoin and Ethereum are both in bouncing positions. And if they do bounce, Cardano is obviously going to bounce off this support. It's going to form that double water formation. And then it's obviously going to be one of the kind of bigger movers when we move to the upside. It is worth noting, however, Cardano is basically a stable coin at this point, as a lot of people would say. It moves very slowly. However, you can't deny when the technicals look good, they look good.
And that's 100% correct. The risk-reward ratio is there.
Yep.
You make the trade. The potential reward compared to your risk on that one is phenomenal. And I can't speak today clearly, but you understand what I'm trying to say. What I do want to point out is a lot of altcoins are sharing very similar charts to that of Cardano. If we bring up basically any other altcoin, we'll see a lot of altcoins are kind of at that lower horizontal support line, which you indicated being that last final stand for Cardano.
Yep.
And it does go to show that we do need to see a bounce here in Bitcoin. Otherwise, if we do crash any lower, it's going to be very bloody for altcoins. Altcoins can definitely see catastrophic crashes coming their way if we see the market drop much lower. And I think it's very important that if you are trading right now, and if you are in the market and you haven't sold, you tighten up those stop losses. You know, like 2018, guys, I don't know if you guys are around or even before, altcoins went down 97, 98%. And I'm not saying we're going to see the same thing this time around, but a lot of altcoins are already down 80% from their all-time highs. And they can definitely move down a lot more.
For sure.
Let's see.
Is there altcoins you wanted to bring up?
Is there any other ones you want to talk about?
Well, I'll bring up my screen. I've got a few, just kind of reiterating that point that a lot of altcoins are on that major support zone. I mean, for example, some of the altcoins I've talked about on my channel a few times, one of them is RLC. This is kind of important to note here because this one's actually dropped below that major support line. And this was one of the stronger support lines, right, that I've seen. I think we tested the support line maybe 14 times. I'm not going to count it out now, but it was holding a lot. And the fact that we've dropped below it here, at no fault of the fundamentals, and not really at any fault of the volume either. I mean, the volume's quite significant. You know, we've dropped below it, we've come back, we've rejected off of it. So even though some altcoins are holding the structure, for example, Cartesia is still holding, Bitcoin Cash is still holding, right, still holding that major support, they are all on the edge. And if they do fall off that edge, there's not going to be really that much stopping, right? WAN chain's holding it technically, that kind of triangular formation that I've drawn. But the point is, right, if we drop down another, say, 10% on Bitcoin, all of these altcoins, all of the last remaining altcoins that are just holding on are not going to be holding on anymore. And that's when we're going to start seeing that rapid depreciation and valuation for altcoins. And so that's why I think that right now, when we see that Bitcoin rally, or that Bitcoin dead cat bounce, whatever you want to say, is going to be the last kind of firework of this, maybe even, you know, of the next 2 quarters for altcoins. And from that point, it's just going to be a depreciation to the ground. You know, Bitcoin is on support. Some altcoins are on support. And so look at those altcoins, take your last couple of trades. When we see evidence of that Bitcoin bounce, don't do it beforehand, right? Don't just guess. You need to wait for confirmations, because that's probably the last opportunity you're going to get for at least the next 6 months to trade altcoins in a bullish way.
Yeah, I think you're right in saying that, but I also want to point out that there is always opportunity to make profit on the way down as well, because prices don't just drop, they bounce. And I do want to bring up my one chain chart. That might be the wrong one. 1 second.
I'll just further, while you're getting up that chart, I'll just say that, you know, that's very important to note. I like to think of it like a tennis ball, right? Using analogies is actually very important in a market like this, especially when you're speaking to beginners, right? When something drops, if you're dropping a tennis ball, it doesn't just flatten out straight away. Even though the long-term trajectory is it's going down, it's probably going to flatten out on the floor. It's going to have bounces, and those bounces are going to get smaller and smaller and smaller. It's the same thing with technical analysis. There's a lot of analogies you can use from real life that actually apply, and that's why it's a lot easier to learn if you use those analogies, which is a little tip that I found.
Yeah, so I just that's a great analogy, actually. I like that one. And I like the other one you talked about with the volume profile. I listened to you speak about it, how it's like a valley in a mountain, where when you're between in that dip, it's much harder to climb up the mountain than it is to go down the mountain. And I thought that was a great analogy. So one chain is one, again, at that long-term support line. We can see that black horizontal support line, and we've tested this, honestly, more times than I can count. You know, numerous amount of times. This whole range, we had like 10 retests or something in there, and now we're coming down to our range again. And a lot of altcoins are in that similar position, especially those 2018 coins in that position. A couple of the newer coins aren't quite there yet. I want to bring up BNB after, but we can see if we lose this support here, that 55-cent range, you know, one chain is taking an express, you know, route all the way down to 45 cents, you know, as a bare minimum, and it can go much lower than that. That's for sure. So taking a look at BNB, if we take a look at this one, again, we are in that crevice of that volume profile. and we're underneath that 200-day moving average, which a lot of the newer altcoins, Solana, Matic, Mana, just to name a few, FTM, they're at this same position now where they've crashed below that 50 SMA on the daily, and now they've dropped below the 200-day moving average. And I guess the big thing that we need to see here happen is a break and close above. If we remain underneath this 200-day moving average for the next 20 hours and close below it, we will see a continued drop downwards.
Yep.
Yeah, that's about it. That's all I wanted to go over. Did you have anything else to add, or?
Not particularly. I guess just to summarize, be patient. This is kind of my summary of what we just talked about. Be patient. The bounce is probably coming. Don't try and predict it. Just wait for it to happen. There will be opportunities to trade when that bounce happens, in my opinion. And ultimately, the long-term trend is downwards. And so, the only thing I would kind of encourage here is if you like DCAing Bitcoin long-term, that's the only kind of scenario in which I'd recommend you buy, right? If you've got that mentality of you're just going to buy whenever, at whatever price is at, go ahead, buy up. But if you're looking for like a short-term swing trade on a Bitcoin, I think it's way too high risk right now. Just wait until we break above 53K, or wait until we go down to that 200-week SMA.
Yeah. As a trader, hearing dollar cost averaging makes me freak out. I'm not a huge fan of dollar cost averaging.
Yeah.
I think wait for the confirmation of the trend, enter the market. That's simple as that. And obviously, me and Wolves, we're unbiased. Where we take a look at the charts from very logical and articulate manners, and we're going to give you guys the best information we can devise from our experience. And when that break happens, we'll be here to let you guys know. So just stay tuned to future content. And thanks for tuning into the video today, guys. I hope you guys all learned something and were able to take something away from it. Yeah.
Yeah, thanks, guys. Catch you.